Hello and welcome to a brand new episode of Mind Over Money, a show where we talk about how meditation, yoga, as well as behavioral science can help you become a better and efficient trader, investor, and a better human being. My name is Kshitij Anand, and today we have with us a very special guest, Piyush Nagda, who's a director, private wealth and product strategy at Monarch Networth Capital Limited. Well, this is our second part with Piyush on managing fear, meditation, investing bias, as well as managing emotions. Now, welcome to the show, Piyush.
Thank you, Shadish.
In the first part, we talked about a lot about personal biases as well as meditation techniques. Now, in this part, uh, what do you do, when you have to cut yourself from the world, especially at a time when, let's say, Sensex is down by 1,000 points, or what do you do? You switch off the terminal. What exactly is the techniques that you follow to really cut yourself from the world?
Shadish, when this kind of extreme movements happen in the markets, there's 100% chance that these extreme movements can create a lot of anxiety and stress among the investors and then the market participants. And
Right.
this could lead to a lot of impulsive and irrational decisions because you just don't know what's happening and just want to follow the trend.
True.
So the best way is actually to detach from the market for a while. Just take a pause. It could be anything, but just get out of that particular atmosphere for a time being,
Hmm.
and don't try to chase it and try to be there every second. So detaching in any format, it could be, just go and do some breathing exercise or some pranayam, and instead of watching a screen or TV for that particular moment.
Right.
This pause can definitely help you to calm yourself and get into a better decision making, a more rational decision making process
Right. So
instead of being carried away. Yeah.
recollecting thought is something that will in fact help you, as well as, if in case we are in a situation, or investor, the first time investor who are in situation like this, when probably the trading bets might not be going their way, or at least if they're not invested, or if they're not trading but are investors, still the portfolio might not look the way they want it to look. Still, it's better to just switch off, distance yourself, recollect your thought, and work on the new strategy. I think that's pure gold from you, Piyush. And I think next question is a very pertinent one at this point in time, because 90% of the traders, they are very afraid of losing money that they can, and usually what happens is that they stop trading post that. Do you remember any instance from your past when investor or trader must have come back to you on that?
So here, very interesting things play out in the market. The fear of losing is greater than happiness of gaining. Most of the time, if somebody feels that I'm going to lose my bet or my money on my investment call, that fear itself stops the person from taking a decision.
Yes.
Now, generally, everyone wants to buy at low and sell at high. It's one of the best things to be, to talk about, but it seldom happens. When markets are in downtrend, people generally avoid investing when things are available at reasonable levels, and then we have seen this behavior also getting into investors who are doing SIPs. A lot of investors, they even stop their SIPs when the market fall, contrary to whatever is being told about the product and the way it's helping people to manage their behavior. It removes a lot of problems if you do get into SIP kind of a product. But so why these behaviors they play out? So a lot of initial traders who have entered the market, they initially make some money, and eventually they play more than beyond their capacity, and they lose a lot of money, and they're stuck with the holdings. And suddenly when you're stuck with those holdings, you become a investor from a trader. Now this switch creates a bigger problem. Investment is not a problem, but this switch typically it's not strategic in nature, because now you are holding something which you didn't wanted, or it's not the quality or the kind of the things which can literally cope up when the markets go back to the same levels. So you're stuck with the wrong stocks as an investor. And So starting as an investor from stage one, or your initial journey, can help you to strategize that and invest in more quality stocks, or the stocks which go along with your theme. It could be direct equity, or it could be mutual funds. So strategizing it is more important. And here, trader becomes investor and investor becomes a trader, because ultimately, the psychological aspects or our emotions, they keep playing their part on their side.
So how can one overcome the noise in the market? Usually we've come across as well that, especially for traders, when there's so much going on the TV, or maybe on Twitter or on Facebook, or so many Telegram channels that have opened. So there's a lot of noise whenever someone is trading, or probably planning to invest. There's so many things that probably impact the bias, or create a bias for a certain sector or a stock. So how exactly one can deal with that?
So right now, we're going through an era where it's 24/7 flow of news and data, and which creates a very high decibel market noise. And this further compounds a normal person's problem, because a normal person who's doing his own business or job or anything else, who don't have too much of time to track all these things, he feels that he has to continuously act or react due to the fear of missing out, which keeps playing out on your mindset. So, and this severely impacts your investment decisions, and then the resultant outcomes. So the best way actually to avoid all this is either take the services of professional asset managers or financial advisors who can help you in minimizing this distortions and maximizing the returns for long-term wealth creation. Second, the best thing which comes to my mind for people who don't have time is definitely, and who don't have too much of investable surplus initially, and they are getting initiated in the markets, are systematic investment plans. SIPs are one of the best ways of disciplined investing for long term with lot of peace of mind. It's one of the most simplest and one of the most powerful products we have. So my recommendation to anybody who has recently entered the market is that whatever you do on the trading side, definitely you are aware of what you're doing, but allocate some funds for SIPs for long term. Don't ignore this product. It's one of the best products which can help you to uh, overcome this psychological biases and allow you to have a disciplined way of investing.
Thank you, Piyush, for your time today. And that's all for now. But do stay log on to etmarkets.com for more on news, business, and economy. Again, thank you so much for your time.